Hey guys, my name's Hannah, and welcome to a new segment we're trying called Trader in Training. This is Renato, and he's going to be teaching me all about stocks and trading. So let's get started. This is our first go. It's going to be interesting, so stick with us here.
I'll give you a background of my journey. So 2012, 2013, I see Bitcoin and I'm like, oh my gosh, you can like make money trading this.
Yeah,
But I had no idea how any of it really worked. I didn't understand what it was.
I
So
still don't.
it was just a way for me to like get engaged in markets. So I just started self-studying for a very long time through university and basically graduated, but I didn't really have any direction and I didn't have any money to really do anything.
Okay.
So I ended up, I knew about Benzinga. I joined Benzinga. Through this, I joined as a journalist actually.
Oh, really?
So
That's so
I
cool.
started just interviewing people in financial technology because that's where they wanted me. But then, through time, I got some opportunities to interview, traders and stuff like that.
Yeah.
Got some mentorship opportunities, and started learning that way. Got some direction, saved up enough money, and then went out on my own, basically to trade. And
Wow, that's really
so I
cool.
do that to this day. I have my own firm that I kind of do it under,
Oh, I
and
did not know all of this. This is really cool. Okay.
and I'm here at Benzinga. I was a journalist. Now I'm kind of doing a lot of the events planning and stuff like that that we have. So we have financial technology events. So my job is to kind of go out there, try to find speakers, and have them speak on topics that I've created and stuff like that. And so that's
Okay.
kind of the big focus right now, other than maybe doing some interviews here and there at Benzinga. But
Sounds good.
I guess today, the goal is to kind of get into the basics of what are markets, why do you want to be a part of them, why should you not be a part of them,
Yeah.
yeah, what are the
I'm
alternatives?
like terrified. I've always wanted to know about this stuff, but I'm so scared to get involved because I don't want to like screw myself over and lose all of my money.
Yeah, yeah. So I think, and this is important because no one really talks about it. Is why should you not be involved in markets? And I think we
Yeah.
should talk about that too, but we'll get into it in a second. But
Okay.
Um, I guess a good place to start is what are some of the different markets, right? So you have the stock market, you have the debt market, you have derivatives markets, right? So you hear about options and people getting rich quick, right?
Yeah.
That's where that kind of comes in. Then you have futures and swaps, and we'll kind of talk a little bit about that in a second. But
Okay.
so let's start with like the stock market. So you're an organization that needs cash, right? So, with this cash, you can kind of like grow your business. You would pay for workers and all this kind of stuff. So there's two ways, basically, that main ways that you can raise this cash. It's through the debt markets, which is like issuing a bond, and the stock market, right, where you issue shares, and you allow other people to be owners in your company, and in exchange, they get to kind of participate in your company's upside, or whatever.
Okay.
Um,
This makes
so
sense. I feel like this is somewhat familiar to me.
yeah, yeah. So in bond markets, right, you have issuers, and that can be a government, and it's
Okay.
basically a legal promise to repay the amount borrowed, which is the principal, at some future date and time. And in the meantime, you also get periodic interest payments. And in the stock market, you have issuers, which are businesses, and they'll sell shares. So people like you and I can buy those shares, right?
Okay.
This is, so you go on Robinhood or something, you would buy shares in company A or XYZ or whatever it may be. And
Okay.
in exchange, for helping them finance the operations of their business, invest in their business, be able to like grow, you basically have exposure to dividends and the potential capital appreciation of that, company. So,
Okay. So I
um,
want to go back a second.
yeah.
So I've heard a lot of people talk about these different apps that you can download to start like getting involved in this. Do you have like a recommendation of which one you would like say to get? Is there like a better one? Because like when this first became a conversation in the office, a bunch of people over there started like spitting out their opinions on which one they think is like best. And like I heard some negative things about Robinhood. Like, is there any recommendation on what one you would recommend going for?
You can use anything really. I mean, probably if you're just starting out and you're trying to actively kind of engage and test things out, you can use something like a Robinhood. There's nothing wrong against that.
Okay.
And I guess the mentality that you should have when you're treating those things. Well, the problem with Robinhood, I guess, is maybe it can come off a little gamified. And so maybe,
Okay.
but if you do treat it seriously and you understand there's capital at risk and so on, maybe you can start building a good foundation or whatever. But we'll get into kind of apps and stuff in a little bit.
Okay, sounds good.
Yeah. So I mentioned two things. I said dividends, and then you have capital appreciation. Dividends are a portion of profits a company may distribute, allowing us to benefit from positive cash flows generated by that company. And then
Okay.
capital appreciation is basically stockholders is positive exposure to a business's good use of funds to grow, expand, increase the company's value and stock price.
Okay.
You might know about indexes, so you hear about like, oh, what is the S&P 500 doing today, or something like that, right? And so that is basically just kind of taking all these different this universe of stocks, kind of putting together, and it's kind of tracking, what is this universe doing, right? I guess is kind
Okay.
of a naive way to put it, right? Um, and then you have ETFs, which you've heard of,
Yeah, I've
which
definitely heard of these
yes,
things before.
which will track these indexes and so on, and
Okay.
it's almost, you can buy it and sell it like a stock, right? But there are some important distinctions which we can get into later on.
Okay.
And then regarding accounts, you can be a self-directed investor, right? So you can have kind of like you'll hear margin accounts, cash accounts, right? Then you have retirement accounts, 401ks, all that kind of stuff, which we
Heard
will get
so much
into
about
in detail.
for
I'm not going to go into today. We're just going over basics,
Okay.
right? We're
I
going
was like,
what is out there, and then we'll kind of
a
start
lot
breaking
of
it
these
down.
things are like setting off like little like
But
bells in
that's
my
good.
head. So yeah.
That's good. That's good. So then you have we did the bond markets, right? You
Mm-hmm.
understand that's kind of like an IOU, right? Where you're getting repaid over. You will get your money back. Then you have
Mm-hmm.
stocks, which is basically you get to be an owner, right? And your risk is basically you lose all your money. But
So that's terrifying. I don't
but
ever want to do that.
we'll get into how do you reduce your downside and reduce portfolio volatility with derivatives and stuff like that in a later
Okay.
show. Then you have derivatives markets, and that the most common thing that that is a derivative or that you might hear around the office is like an option, right? But then
Okay.
uh, basically an option you can use to kind of hedge your exposure in a stock or asset or whatever it may be directionally. So you might be short a stock, you can buy a call, and you can hedge your against the stock going up and then you losing money, or you can buy like a put option. We'll get into what these
Okay.
details are, but it's basically it can be an efficient way to express your opinion on a stock. So like, oh, I think the stock is going to go higher over this certain amount of time, so I'm going to set this capital forth, and I can participate up or down, or you can use it to hedge, all those kinds of things. Then you have futures, which are basically kind of obligations, right, to buy or sell an asset at a certain date and time at a certain
Okay.
price. And then you'll hear sometimes about things like even swaps, right? And so you heard about the banking crisis that we had probably months ago at this point, right? With
Yeah.
you heard Silicon Valley Bank and all these kinds of things, right? And so with a lot of those institutions, um, they might use swaps like interest rate swaps to hedge. When interest rates move up, right? Interest rates have been increasing, right? Bond
Yeah.
prices are move inversely, right? So rates go up, bond prices move down, right?
Okay.
And so if you're taking your depositors' money and you're putting it into these assets, and these assets go down in value, what ends up happening is now if those depositors want their money back, you have less money to give them. So basically, you can use those swaps to just basically reduce your interest rate, negative exposure to interest rate movement and stuff like that. Then I guess the next big thing to cover is what are some of the reasons to stay away from markets and alternatives, right?
Yeah, this is one that I definitely want to know.
Yeah. So the first thing I ask when talking to someone interested in markets is what is your time frame and motivations for wanting to get involved, right? I told you about how I got involved in markets in 2012,
Mm-hmm.
2013. But the whole idea back then was like, oh, I can make a living doing this, right?
Yeah.
And I've gotten to a point where that is, I'm consistently profitable, so that it, for me, for me, it can like make sense, right? But for someone that's just starting to get out, a lot of the stories I'll hear often is, hey, how can I make money? I don't really know where to start and stuff like that. And uh, that is not a good place to be, right? And because I guess often when I'm in those conversations, like you're expecting something, right? And
Yeah.
you're expecting it quickly, and it's not going to happen, right? That's where you set yourself up for some disaster sometimes, which I've had.
See, that's what I feel like the thing is with like, or at least what I've like taken away from like some of this, or just what I know like going into this is that like when you expect it to be fast, like there's just gonna be higher risk, and that's where you're gonna like end up screwing yourself over, or at least that's what like I think.
Yeah,
I
you
could
you
be
can you
wrong.
can you can take risks or not understand what the risks are and get yourself into some odd positions that you don't know how to get out of.
Yeah, I don't want
Yeah.
to do that. Like told them when I like went into this, I was like, I would just like to know like how to like put a small amount of money into something and just like over time slowly see that like increase. I don't even know if that's possible.
Yeah, yeah. So if you need money right away, particularly if you're young, I say avoid markets and active trading. Go start a business, work for a business that offers you equity, and invest in yourself. It will take far longer than you think to become consistently profitable. Right? I started in
Yeah.
2012 and 2013 or something like that. I didn't become really consistently profitable until like 2018, 19.
Oh my
Like it was
God.
a very long road. It was
But
painful.
honestly, I feel like anything has to take time and work. So like
Yeah,
if you're not willing to put that work in, then you can't expect the outcome of it.
exactly, exactly. So if you don't need the money right away and you understand that this is something that um, you could use as a place to diversify, where you're putting your funds and, you know, have positive exposure to, the upside of, these companies. Just, you're betting on, when you're investing in a market, you're betting on that market doing good, right?
Yeah.
Essentially, you're betting on if it's the U.S., you're betting on the U.S. doing good, right? Or the stocks in the U.S. doing good. So if you don't need money right away, consider investing in what you believe in and use, right?
Okay.
So put your money where your mouth or butt is basically what I have written here. But so it's like if you drink Starbucks, you invest in Starbucks, right? Like
Okay, that
start
makes
with the
sense.
basics, right? If you are a real estate person, right? You know, maybe you kind of avoid markets and you invest in real estate, right? It's you don't
I've never
this
heard that before, so it's really interesting.
Yeah, yeah. Alternatively, there's things like, and we can get into an episode if the team decides that they want to get into this, right? But things like life insurance, right, and
Okay.
stuff like that. Like, you can structure things in a way where you can have policies that provide you supplemental retirement income, and you can borrow against that money that you have, that cash value that builds up over time.
It's
Um,
crazy.
there's a lot of ways to, and a lot of that money is invested, right? You'll earn interest, and so it'll appreciate like you own, like, stocks and all this kind of stuff, right? It's just there's a bunch of different alternatives. It's not like the stock market is the end all be all. And I understand that we like work in an office where that is like what we pretty much do all the
It's
time,
everywhere
right?
you
But I
look.
think it's important to recognize that there are a lot of alternatives. And if you're an active trader, um, you know, uh, you you're better off finding a niche, right, and sticking with that. Like, I don't to this day, I don't really understand crypto 100%. I stay away from
I
crypto,
don't understand
right?
crypto.
I ended up The people that I found and who I learned from were, worked in pits, in trading pits, and
Okay.
and they were ex market makers and stuff like that, and especially in options. And so that's where the direction that I ended up going. Right. I'm not like a crazy big stock investor. Right. I'm not going out there and stock picking and telling people what are the fundamentals, or like understand that to thing. I know understand the basics. Right. But there's different ways you can express your opinion and participate in the upside or downside of a market. So we'll get
Yeah.
into that as episodes go on. But I guess
Sounds
the
good.
thing to end on is whatever you do, do it right and do it with passion. So if you're investing,
Okay.
buy the best companies you trust and hold. If you're a trader, find a niche and stick with it. If you're constrained by time, invest in yourself and focus on ways to make more money, right? And I guess next week, we could probably, maybe depending on what they want to cover, we could talk about different stocks that you can invest in, assess what certain fundamentals may mean, like market capitalization, all that kind of stuff,
Yeah.
and talk about starting an account. Right, you talked a little bit about this. We can talk about
Yes.
that.
That sounds fun.
Get into managing those positions after that, and later on maybe derivatives markets and alternatives and all that kind of stuff. But I think that ties it up for me. Did you have something that you wanted to
Um,
talk about?
No, I mean, now we got a lot to soak in. I mean, this was a very
All
interesting
right. I mean,
conversation. I
yeah.
really like your endpoints too, and just how you summarized everything up. And like, I really do like how like you recommend investing in what you like as a person are actually interested in. Because like I've never heard that going into things, and I've always heard like be wary of investing in like big name brands, which I don't know if is like a actual like real concern, but it's cool to hear somebody say that because I feel like that would make me want to invest more, like investing in the companies that I actually like.
And understand more,
Yeah.
probably, right? You probably understand how, like, if you're super into fashion and arts and stuff, and there's a company out there. I'm not that well versed in those companies, but you might understand that, the cyclicality of that business, right? You might understand, like, oh, there's these events that are going on, or this is becoming in trend and stuff like that, and so you
Mhm.
can maybe anticipate those things, and you can start to invest around those things that you see out there.
See, I would never think of those things like correlating, but like now that you say it, like it definitely can. But like
Yeah,
going into this, I never thought about
it
that.
doesn't
So
have to be all numbers and
I hate
stuff,
numbers. I haven't
right?
taken a math class since my junior year of high school.
Well, I guess that ties it up for me.
Okay. I think we're all set, guys. So that was our
Cool.
first episode. We hope you enjoyed it. We'll be back next week for another one. And yeah, we'll just keep learning together. Um, Follow our YouTube channel for more, and we'll be seeing you guys soon.